The point I'm making is that the only time that the big money, smart money, super wealthy move basically out of bonds or at least into gold is because they fear that something could take place that would disrupt the most, quote unquote, most stable market out there, which is perceived to be the bond market. It could go that way for a while before they hyperinflate, or they go into some type of inflation that's really gets out of control. And if you don't have the metals, that's the time that you want them, and that's the time that you're going to have to pay up a lot, or they'll be unavailable. I think this time they could become unavailable rather quickly.
Welcome back to Finance and Liberty and Reluctant Preppers. We have a very popular returning guest, David Morgan, also known as the Silver Guru and founder of themorganreport.com, joins us again. David, thanks for coming back.
Donegan, it's always fun to be with you. Thank you.
We couldn't let this opportunity pass by the end of the year here. Today is Thursday, December 19th, 2019. We wanted to catch you for a year-end recap and a look ahead to the new year coming before we go full tilt into the holiday season. And understand you just returned from some international travel, so welcome back. Hope the jet lag isn't catching up you too bad.
Thank you. It's good to be home always. It was good to be away too, but I'm glad to be home. A little snow last night. It was clear roads when I drove from the airport about midnight, and looking at about a good 4 to 5 inches out there right now.
Wow. Not in every state would they consider 4 to 5 inches a little bit of snow, but I understand what you mean coming from where I used to live in Minnesota. So, hey, we wanted to get you to weigh in on a couple of points you raised in a recent podcast last week, actually, where you talked about one story which was brought out from some different news sources talking about wealthy individuals and wealthy families amassing gold, physical gold in particular. Can you talk to us about what evidence is showing at this time? Because it's been quite often we've had various guests on talking about watch the money, don't just watch what they're saying, but what they're doing. So what are you hearing from in these articles?
Right. If I could just lead in with the fact that I've been doing a podcast now for well over a year. It's every Friday or Saturday. I call it the Weekly Perspective, and I wrap up the week's financial news, try to keep it around 10 or 15 minutes. And then I hit usually something about gold or silver, both at the end of the podcast. So you can get that on the website, themorganreport.com. It's free. Just scroll down to podcast. You can listen there or put it on your iPhone or Android. So, yes, I was talking about most of Goldman Sachs articles. There were some others talking about what you just said. The banks have been loading up on gold, which you really don't hear about in the mainstream financial press. And above and beyond that, a lot of rich individuals are. On the rich individual comment, I mean, if you really know finance, and I'm not trying to be better than anybody, it's just been a passion of mine, but the very wealthy are called coupon clippers. What's that mean? Well, in the old days when yields were high in the bond market, there was actually little tabs on the end, around the bond, and you would clip those for your 10% yield and get your 10%, quarterly or annually or whatever the coupon rate was and what the time period was. And it was basically people that had so much money that they didn't have to work. They put it into bonds and basically lived off the interest, and they lived very, very, very well off the interest. Well, a lot of that's basically gone away since interest rates have been pushed down for so long. So now the bond market has become a trader's paradise because with the leverage, you can get a huge return on the price of the bond based on a small increase or decrease on the interest rate. So if interest rates go down, even slightly, the bond prices go higher, and there's a bet you can make, especially in the futures market, ETFs, the way banks operate or whatever, and get this huge leverage factor. So instead of getting something like a 1% move on a small interest rate change, you might get 10% because you're levered at a 10 to 1 factor, maybe even higher. So this is what's been going on. The point I'm making is that the only time that the big money, smart money, super wealthy move basically out of bonds or at least into gold is because they fear that something could take place that would disrupt the most, quote unquote, most stable market out there, which is perceived to be the bond market. I mean, the perception is, it is that nothing is more stable, pure, guaranteed, safe than the United States Treasury market, be it a T-bill, a T-note, or a T-bond. If it's the United States backing it up, it's as good as gold. And that's just a complete and total fabrication. There's no way that any of these things, other than maybe the short terms like the T-bills, can be paid off in real terms. You might get your quote-unquote money back, but what is the value of that money? And we know the value of the money continues to deteriorate over time, even in these quote-unquote disinflationary periods. If the disinflationary period has a modest 3% inflation and the yield on the bond is 2%, you're still losing money. And then they're so blatant, they being the banking system at large, so blatant, so obvious, and so self-assured that they'll even put out now negative interest rates right off the top. Give me your money, I guarantee to give you less back. And what kind of insanity have we reached? So obviously gold that doesn't pay a yield is a better investment than a guaranteed loss. So you're seeing these people wise up, and I think they have been for some time. It's just that they're getting some press about it now.
That's for the wealthy individuals and families, but if we could zero in on central banks that are amassing gold. Over the summer, earlier in the year, we were talking about Russia, and prior to that, India, and then there was some question about China, like 10 months in a row buying gold at higher rates than usual. And now Turkey emerges. What's the story on Turkey?
Well, I mean, a lot of these nation states are looking to get their gold back or repatriate it because they've, got it stored in, let's say, London or one of the New York Fed banks or holding facilities on the COMEX. So these countries basically want to say, what Mike Maloney and many others say: if you can't touch it, you don't own it. They have it on paper as ownership. They're saying, "No, send it to me. I want to be able to touch it." So that's what's going on. And then you had like Venezuela that asked for their gold back. And I forget if it got sent back or not, but I knew the end game. The end game was if they got it back or just got it back on paper, regardless, however they got it back, they were so far in debt that they lost it anyway. So in other words, it was used as a means of final payment on some of their debt. I mean, the game is rigged. And it's unfortunate. But going back to the banks, I really don't think gold is going to be used in the monetary system in a large extent. But I think these major banks are holding it as an asset of last resort. It's always worked for 5,000 years. Chances are it'll work again if there's further monetary disruptions. But whether it comes out into the main platform as a gold-backed currency or not, I still think it remains to be determined. However, it could certainly bridge that widening fear of what asset do you have that I trust, and it's trusted. So I think a lot of these smarter banks are obviously going to gold because they need a buffer or a hedge. They know the game. They know that interest rates can't be paid forever. I mean, we did on your show some time ago, but, we talked about the hypothetical God giving Jesus, 2 cents at, his 15th birthday and let it compound at 2%. And if he did that from now till the year 2019, it would be the equivalent of all the money in the world times 6. So you can't have interest rates compound, even at a very modest rate, for 2,000 years in a row. It can't be done. And that's why these things fail. That's one of the reasons these things fail. The other, of course, is you couldn't compound gold. The thing about a gold standard, and it gets corrupted too because it's not gold. Gold's an inert element. It's nothing to do with gold itself. I mean, it can't talk, it can't think, it can't walk. I mean, it's just an element that we use as money, and everyone pretty much agrees that it's one of the better forms of money. But the problem is you got the human element involved. So if you've got so much gold in the bank stored and the bank lies about how much is there, well, now you got a human problem, not a gold problem. But, there's a lot of, and I look at all this stuff, and a lot of it has merit, the gold standard never worked. Well, it wasn't that the gold standard didn't work. What didn't work was the human factor. That's what didn't work. So back on point, I really, as we said before, and I'm working with David Havner of The Last Evangelist as a technical advisor on the last days of the monetary system and what the mark of the beast may or may not look like. I'm still doing research and not the most studied. I've been pouring into it quite a bit, calling people. One's was studying to be a Jesuit, dropped out. And I mean, you know, I'm using my network and my research skills and everything else, and I'm still forming opinions. But one thing, as I said before, and it bears repeating, is I'm absolutely convinced that the next system that they want, whether or not it materializes or not, I don't know, is a cashless system. There's just no doubt in my mind that the next system will probably be some type of cryptocurrency that, you know, a lot of the libertarians think is the answer to everything. I'm not convinced that it is. It's a very big control mechanism, really, especially if there's a government-backed, centrally controlled cryptocurrency that comes to the fore and is called the Globo. I'm just making up a name, but it's the global currency on a crypto platform. And they say starting, you know, Tuesday at 10 o'clock, all other cryptos are null and void. All will be merged into the Globo. And here's your, you know, to get that, stand in line and get this tattoo on your head that's, you know, UV. You know, you don't ever see it, but it can be scanned, you know. So a lot going on. I know I'm reaching out. I know I'm going deep down a rabbit hole, but these are the kind of things that concern me and I think about, and I certainly don't have all the answers, but I continue to probe, think, and I'm concerned that, you know, we're entering a situation that is going to require probably a strong government/personality type that's going to come to the fore to save us. And people, when they are desperate, look for something that will be helpful, useful, ease their fear, put them out of fear, give them some reasonableness to come back to normalcy. And that, of course, sets people up for a very, let's say, a rush decision that they might not make otherwise because they're basically put in a corner. So
right.
I do think we are going to see a reset of some type. Whether it's anything close to what I just outlined, I don't know. I believe it will be something along those lines. But no one, I don't care who it is, even the bankers at the top of the pyramid, I don't think they know exactly how it's going to go. But they certainly have, you know, plan A, B, and C, and it's probably going to fall into one of those three categories, or a conglomeration of all three, or a conglomeration of two, or whatever.
A couple themes I wanted to probe that you brought up in passing there. One was we mentioned China, India, Russia, Turkey. I forgot to mention Poland. Poland, their main leader had announced a few weeks ago that they are publicly going to be amassing physical gold to demonstrate the strength of their country, the financial strength of their country. We haven't heard the same thing from the U.S. What's your thought about why we're not hearing, you know, the U.S. flexing its gold muscles the way it seems like China and India and Russia and even Poland are?
Right. I did an interview recently with one of the websites that's pretty prominent. Not that yours isn't, you know, and you never know on the views because you can jack that number around. But the point is, you know, is the Fort Knox gold there or not? And there's enough articles and enough information out there to lead me to the conclusion that, one, it could be in the vault, but the location doesn't prove ownership. Those are my exact words on the last interview. So just because the United States Treasury vault at Fort Knox holds 265 million ounces of gold, which I really, really, really doubt, but let's say it does. Just it's all there. They audited it. It's all sitting there. So what? That doesn't prove ownership. It proves the location is there. But that could be loaned, swapped, hypothecated, rehypothecated, used as a balance of payment, used as some, you know, I hate to say it, secret stash that's used for black programs. Who knows? But these people, you know, and I'm not trying to be too critical of, you know, my fellow human beings. Believe me, there's lots of areas of the human experience I know nothing about, and people are far superior to me in certain areas. This is just one area that I devote a lot of time to. But the idea that, you know, if it's sitting there in that vault, that's the owner is ridiculous. I mean, the amount of silver that's sitting in the COMEX warehouses, not all, but almost all the eligible isn't belonging to the banks that's holding it. That's by investors all around the world that own it. It's only the registered inventory that's held by the bank. So, so I just want to make clear on that. I think it's mostly gone. I think the reason, look, if the United States had a strong gold position, wouldn't they go out and audit it tomorrow and tell everybody, hey, we still have 265 million ounces. Not only is it in the vault, but here's proof of ownership. We've only hypothecated this much, and that was for a loan to, China in 1940, and it's been paid back or whatever. But you're not going to hear that. When my critics, and it's welcome. It's open discussion. I mean, if there's free speech, have at it. And my critics say, well, it's audited every year, and it shows up every year in the annual statement, and that is such a ridiculous statement. What that entity is saying is that there's a line item that says gold, ... and it gives the number. But there's no audit behind it. Just because it's signed by some official source in Washington District of Criminals means nothing to me. Nothing. I mean, if you haven't learned by now that the political class thinks that they're superior to us in every way, shape, and form, be it left or right or in between, then you should not be watching this channel. Go somewhere else.
The other thing that you made me think about when you were talking about these countries, these central banks wanting to repatriate their gold to their own possession, was what it shows us about the atmosphere of trust or loss of trust at the central bank level. We've also heard that this whole Fed bond repo, because of illiquidity between the banks, is a good indicator of loss of trust of the banks being willing to lend to each other. So can you talk to us a little bit about your experienced views on the environment that we're in and what these signs may be indicating in terms of loss of trust between either central banks or major commercial banks, that sort of thing?
Sure. Years ago, it's probably still out there on the web somewhere, I wrote an article called dollar.com, and the subtitle was dollar.con, and it was all about, in a fiat system, it's all based on confidence. And that's confidence at what level? Well, it's confidence of people that have money in the bank believing it's theirs and it's going to be there when they need it. And it's also confidence bank to bank. And the reason we got so close to a complete shutdown in 2008 wasn't because there wasn't any money there. It's because the money wasn't trusted. In other words, the subprime mortgages and all these sub bets on CDOs and CDO squares and all this stuff that was going on, these bizarre derivatives, no one trusted each other. I mean, no one at the investor level to the brokerage house level to the bank level. And so basically the system was stopped flowing. I mean, a bank holds the river's flow. Money has to flow. And it was stopped temporarily. And the reason it restarted was that paper that wasn't trusted by either side was substituted. It was taken out of the marketplace, and the Treasury bills, T-notes and T-bonds, in other words, U.S. government paper, replaced this toxic crap that neither side trusted anymore. So that started the flow happening again. And since then, we've just been adding more and more to it to keep the river going, because if we don't, it could slow down or stop. Well, now we're seeing a similar situation, but it's not because of toxic mortgage paper. It's basically banks not trusting each other. And this one's a little more cagey because really we don't know why. Now, the banks probably know why. But I spoke to Bill Holter after his interview on USA Watchdog, and Bill said, and I'll take him at his word, 'cause I've been gone. I haven't had my normal setup to do my normal deep dive, but he said something to the effect that J.P. Morgan had taken $165 billion, and rather than use it in the repo market, they bought Treasury, bills, notes, bonds, whatever. They put it back into the U.S. Treasury market, and that wasn't available to the overnight market. And because of that, these banks had to go to the Fed directly to borrow. So assuming that's true, and I'll take him at his word, it probably is. I haven't checked it. But the point isn't, is that true or false? The point is, why would a JP Morgan take money that they can get a much higher return on in the overnight repo market and park it into U.S. government securities? Well, because they fear putting it in the overnight market, they're going to lose it, or they're not going to get it back, or there's too much risk involved. So let's just say it plain English. They felt there was too much risk involved, and therefore they put it in, quote unquote, the safest market, which I've explained over and over and over again is only safe until it isn't, which could be day after tomorrow. I don't know, but we're getting closer all the time. But this is seizing up the banks. These banks have to go to the Fed as a party of last resort to borrow money. So it's the con game, and the confidence is getting less and less and less and less. And, the bailout is not a viable choice anymore, because after the 2008 crisis, that's off the books with the Dodd-Frank bill that was passed by our Congress and Senate critters, our political class that's, of the people, for the people, and by the people. Ha ha. And they have bail-ins. So if you have any money in the bank that you think is yours, you better read your contract, because it's the bank's, it's not yours. And if that day comes where they need to keep themselves solvent at your expense, it could happen. Would it happen? I don't know. It could go the way of Argentina, not the most recent Argentina, by the way, but one in the past around the year 2000, where your money was still, quote unquote, yours. The only restriction was you couldn't get it.
Right.
You could only get like 300 pesos a week, and maybe your mortgage payment was 10 times that much, and you had the money in your savings, but you couldn't give it to your mortgage company because the bank wouldn't allow it. I mean, this is ridiculous, but this is the kind of garbage that happens. And, if I say I'm wound up and fearful, it's because I'm wound up and fearful. I just think we haven't got a lot longer to go in the charade. And I'm certainly not advocating you put 100% of your, savings into the metals. I think, some good quality stocks are probably smart, especially on the contrarian side, which these days would be, precious metals or resource stocks, and also the energy sector. There's probably some, gold or silver-backed cryptos that might be worth having a handful at a small amount, kind of as a side bet, long shot type of thing. And, any real estate, if it's already paid for or close to it and is paying you a good, yield, then that's probably a smart thing to have. But I wouldn't be jumping into real estate at the present time unless, each case is individual. You find something at a distressed sale, renting something, and you can buy it for $100,000. It's going to give you 10 or 12% a year. Well, that's something to do. But I think that there's a lot of people that are waking up to not only what's going on in politics, but what's going on in the financial system. They seem to be going hand in hand. I mean, just like the fall of the Roman Empire, at the end of the whole thing, the senators were in there basically taking as much as they could out of the public treasury as they could get away with, and not serving the people at all, or serving them in another way, to catch my drift. And we're seeing the same thing now across the board. I don't care what stripe they are. That's corruption is rampant throughout basically the corporatocracy, between the corporations and the politicians working together, basically to on the backs of the regular working folks that just basically are too busy making a living to worry about this stuff, or take the time to understand it, or a lot of them just want to ignore it. And in a way, I don't blame them. It's their choice. Of course, it fascinates me, but it's something that I really, really am getting more concerned on a time frame wise. I think that there isn't much time left, and I don't mean that everything ends. What I mean is there's an adjustment, and it'll be a big adjustment in my view.
Let's talk about that for a minute, about the cashless, because you mentioned in the past about this push. You're anticipating towards maybe a global cryptocurrency or something like that. But anyway, being cashless, and we just had about a month ago, Christine Lagarde appointed as the new head of the European Central Bank, which is like the Fed of the Eurozone, and she just came right out and said that the negative interest rate policy of her predecessor, Mario Draghi, was the right course. She said, we should be glad to have our jobs, even if it means sacrificing our savings. So if you can't get access to your cash, like you mentioned in Venezuela, and the cash is being taken out of the economy, and it's not going to be the medium of exchange anymore. What becomes, as you point out, if people haven't protected themselves with some precious metals, they really need to think through how they're going to protect themselves from the loss of all the fruits of their labor from however long they've been in the workforce, or if you're going to go to where you can't hold cash, but you're just going to be considered lucky if you can just keep your income coming in for your living expenses. That seems to be a very vulnerable and dependent position to be in, not one of strength for a sovereign individual.
Right. Well, sovereign individual, don't we wish? No, there's, I'm going to digress here a little bit, but, I guess the last Star Wars movie's coming out like this weekend or something. And, I've watched, I think, all of them. There's one kind of in the middle of the series that the spaceship breaks apart and they go to a junkyard and find parts to rebuild it. And there's little flying creatures out there. It's like a small elephant with wings or something. But anyway, and they say, they're going to give them so many federal credits. They said, oh, no, not out here. We need gold. And he bites a coin. And that's it. I mean, it may be a federal credit, or it may be a global credit, or it may be a Bitcoin. I don't know. But it's all about control. I mean, these people want to know every single transaction that you do. And if in a cashless system where your paycheck goes into the computer, there's no cash. Everything goes into the computer. It's digitized. You can pay for whatever you purchase with your phone, and that's the current system. Eventually it'll be probably a tattoo somewhere on you. Could be on your forehead, could be on your arm, it could be a multitude of different systems. It doesn't necessarily have to be on the human being, although that's probably the most likely the way things are going. It doesn't even have to be a chip implanted in you anymore. It could be, as I said, something that's only read by a RFID type of scanner on a tattoo system that you'd never, ever see. But it is there. So this is the direction we're going. There's no ifs, ands, or buts in my studied view about it. And the thing about Bitcoin that no one voices very much, Keith Weiner did. And so I'll give credit to Keith because he deserves it. But, there's really no clawback. If I make a purchase, in fact, I just made one, okay? I won't say what it was. It's a small purchase. It was $60. I made it on PayPal. Somebody I've dealt with in the past, and they never sent me my product. So I contacted her nicely and said, I've done business in the past. Maybe you're having a rough time. Maybe you're out of it. I want to know. No response. So I got a hold of PayPal and escalated to them, and they went and contacted, and had no response. So I got a refund. As I should, because I paid for something and I had some recourse. And that's the monetary system as it exists now. But in Bitcoin, you could be the best scammer out there and have, the XYZ of trading, stocks or whatever it is. You can make up whatever you want. And it's, I don't know, 0.001 Bitcoin. And once you make that payment, there's no clawback. You can't go back in and say, hey, I never got this report that I paid for, or it wasn't worth what I paid for it, or whatever. In the credit card system, they always favor the customer. If you buy something on a credit card, in 99.9% of the cases, if you don't like it, you just contact your credit card bank, and you say, hey, I didn't get this product, or I didn't like the product, or I want to stop this, or whatever. And the bank almost always favors the customer in those cases. That's the monetary system. But in the Bitcoin system, which is new money, supposedly, that feature doesn't exist. I mean, once you make that payment, it's on the ledger, but it doesn't mean anything because there's no way to go back and say, hey, I want my money back. You didn't give me what you promised me, or it's not what you said it was, or you never sent it or any of those things.
We wanted to turn our attention, if we could, to the year ahead. We're wrapping up 2019. We're about to launch into 2020. You've already given us several hints of what your macro picture is, what you think the big themes are that we're undergoing. But could you give us just a quick bird's eye view of what you think happened? Because it was a pretty eventful year for the metals this year, and looking forward, what you think the year ahead brings.
Yeah, I think I very seldom write for the public anymore. So I may do it by a video blog, the V blog. But there's been 2 or 3 pretty well-researched articles on, silver in 2020 and gold in 2020. I've read them very carefully. So I probably, do it with the permission that you have under the
fair use
clips. Fair use, yes. Thank you for the help. So I may do a V-blog on that and just add my own 2 cents. I think gold and silver will have an okay to good year. I think, I can see a 30% move in both the metals. Again, I always have to give the same caveat. I know people probably get tired of hearing it, but barring a big event, like something that goes up on the Middle East or, war or China or this trade war gets really weird or, all these things that are potentially right out there, what could cause a big spike in the metals temporarily. Usually when we get these big spikes, they usually cool off rather rapidly. The only way you're going to see the move that I expect is because, unfortunately, I and many others, believe me, it's not about me. Most of this has been taught to me by my betters, but eventually fiat fails. So once the trust is gone, what we've been the crux of our whole discussion today, Dunnigan, has been when fiat fails, what happens? And that's the idea, is that's when you get this rise in the metals, this kind of steady eddy, and then it accelerates and it kind of goes parabolic, and it could get overvalued. And when it does, you should use that overvaluation to buy real assets that are undervalued, like land or real estate or a business or maybe the oil market. I don't know, but there'll be things that will be undervalued at the time. And you want to take that overvalued precious metals that you've, bought correctly and held dearly for so long or so short, depending on when you get in the market, and not be, married to it. You've got to let it go and take it for an really. I mean, as much as I'm an advocate of honest money and the precious metals, they're static investment. They really don't provide working capital to provide more jobs. Well, in mining it does, so there's that aspect of it. But gold really more than silver. I mean, if you hold it, that's fine, but it's really not that productive. Yeah, it creates a few mining jobs, but it really doesn't have a lot of use outside of money, where silver has all kinds of uses outside of money. But I probably went too long, but I always enjoy talking with you because you give me free rein, and it's so important that people really see where we are. It's not what I think. It's not what I say. It's what they can digest from myself and maybe countervailing forces and different opinions. I mean, I was at the New Orleans Gold Show recently, and one of my, let's say, more supportive type of people came up, and he listened to one of the other speakers. Said, God, that guy made a lot of sense. And he says, everything is just fine, and everything's going to be just fine. And it sounded so plausible, And I said, well, it was just fine until 2008, and we got through that. And since we did, a lot of people have kind of thrown in the towel and said, well, it's been 11 years, since 2008, and nothing's happened, and you guys are wrong, and what's wrong with you? So what? They print money, it works, and blah, 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 blah. And from that perspective, you kind of have to say, yeah, well, you're right for now. And again, if I'm wrong, and this is where I get strong on my view, I'm not saying put everything into the metals. I'm saying you must have a part in there as a hedge, because the last thing you want to see is a debt liquidating depression where paper money becomes more valuable, which I really doubt, but it's possible. Very unlikely in my view. It could go that way for a while before they hyperinflate, or you go into some type of inflation that's really gets out of control. And if you don't have the metals, that's the time that you want them, and that's the time that you're going to have to pay up a lot, or they'll be unavailable. I think this time they could become unavailable rather quickly. And the reason being is the retail market is pretty small compared to the wholesale market. There'll be silver bars on the shelves, but those will be gobbled up by the early birds that will take them and turn them into, 10-ounce bars and 100-ounce bars and rounds and that type of thing into the investment world. And the amount of commercial silver, even in a depression, there'll still be a fairly strong need for it because of so much electronic doodads that we need. I don't want to be a hypocrite. If I don't have my smartphone with me when I leave, like on a trip, or I think I misplaced it, I go into panic mode. That's my, key to the email and the text and everything else I do daily,
Well, David, it's been generous of you, as always, to give your time to us here on Finance and Liberty and Reluctant Preppers. And in order to keep this kind of alternative information coming out, folks, on independent media, there's 3 ways you can help us. 1, make sure that you like and share and subscribe, and also go to patreon.com/reluctantpreppers, and for any amount, you can become one of our supporters. But for a $10 amount or more, you really make an impact that's meaningful on us being able to keep on the air and keep bringing in more guests. We're doing now 3 podcasts a week with your help and your support. And David, we just thank you for being in our corner and always being willing to come back on and to give us your perspective on what's going ahead. It's been a very interesting year, and it sounds like it's going to be another interesting year going forward for 2020. Just thanks for joining us here on Finance and Liberty and Reluctant Preppers.
No, my pleasure, Doug. Thank you. And Happy New Year, Happy Holidays, Merry Christmas, Happy Kwanzaa, whatever. I am open-minded. But really, during this season, let's think about what meaning it has for you. And certainly it's not about getting, it's about giving. And the most important thing we can always give is truth spoken from the heart to our other fellow human beings, whether you even agree with them or not. We, in a civilized society, which I don't sure we're there yet, we can discuss controversial issues calmly and coolly. That's very unusual these days. But as, again, a civilized society, we should be able to, because one, sword on sword, one sword sharpens the other. I certainly look at the left quite a bit because they have something to say, and it clarifies my thinking. It may not be something I agree with, but at least it sometimes will sharpen my point of view even further that, and I'm not about being right. I'm about what is right, the objective truth, not the subjective truth. So anyway, happy everything to everyone. I hope it's a great, prosperous new year everywhere. And a little bit more of my philosophy. Next year, if you choose to, just pause a little bit in your human transactions. The bank teller, the gasoline person at the bank, at the post office, at the grocery store, wherever you find yourself, take that extra little bit of time, I'm talking seconds, to acknowledge them that they are as human as you are, and that's the value. The value is their being, not what possessions they've got or don't have. And I think we get a little more real with each other, and then we're going to be tested on this. I'm convinced of it. And I'll go down the philosophy road a little further. When things get hard and tough, and they will, this is where the true meaning of humanity comes out, and some will fail and some won't. But this is where that real connection with people is going to have the most substance. And you think that just money alone, gold and silver or whatever, is going to get you through. It may help, but it's really going to be your ability to connect with others. It's going to be the most important resource or asset that you can have. So keep that in mind. Maybe do some practicing in the new year and try to get a little closer in a more, let's say, open-minded, or I'll say open-hearted way with those that you encounter on a daily basis. It's a really great spiritual exercise, regardless of what your belief system is. And I'll pass it there. I'll leave it there. And thank you again for giving me your time. I know your time is as valuable as mine. I appreciate it.
Well, thanks for reminding us that true wealth is not just in coin or currency, but in the value of the relationships that we have, and we can nurture that and share that meaning and that appreciation with each other. You're absolutely right. Nobody can take that away either. So thanks, David, for joining us here.
Yeah, my pleasure. Thank you.
They say the stock market crashed today.
Yeah, I heard that.
Sounds like people's retirement accounts and savings accounts are going to get bailed into the banks.
Yeah.
Looks like pension plans and Social Security are going to get suspended too.
I know.
Sure, I'm glad we decided to put our money into gold and silver instead.
Me too.
Get your gold and silver and support this channel at goldsilver.com/?AFF=RP. Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.